Good morning, traders and investors. It's Wednesday, September 24th. Just a quick reminder, if you haven't subscribed to the Technical Traders channel, be sure to click and subscribe here. And also, I want to mention we have a new channel. This is Trade Smarter with Chris VERMEULEN. Here I'm trading tips and tactics with some trade ideas as well going forward. So this is something we're going to be providing a lot of educational content. So more so not just market updates, but more so how to read the charts, how to use indicators, and navigate these markets in a controlled way. So anyways, make sure you subscribe. Markets took a little bit of a pullback yesterday. We talked about these waves of when the bars are green, when the trend is up, and more or less the 5-day moving average is above the 20-day and prices above it, we're generally in a uptrend. And when we're in an uptrend, we don't so much worry about these little waves of FOMO that we get in the market. Typically, when we're in an uptrend, we're going to keep hitting FOMO levels over and over again. That's just the wall of worry, people moving, running in. Usually, whenever we do get FOMO, the market will take a little bit of a pause intraday. You can see sometimes it can last a little longer. We had the Fed out, which created a little bit of a crazy blip here. Overall, we had the FOMO again yesterday, and the market pulled back a little bit. And this one really was a big trigger. We could see it in our emails, the members' comments, all of that stuff. I could feel it in the air, the FOMO that people are having. And so the markets took a little bit of a breather. Today, the markets are trading slightly higher, but we are seeing the dollar move up fairly sharply this morning, up about 0.5%. If we take a look here, we actually had a member mention that it looks like the administration has greenlit World War III. I'm not sure. I don't follow the news too closely when it comes to that stuff. But we can see the dollar here starting to have a push up. This could become a headwind for precious metals. Overall, when we look out on the dollar, let's just focus on the daily chart here. We look at the dollar. It has been trying to find a bottom. This is an early formation of what a bottom formation kind of starts to look like. So it's trying to get a little bit of a bid this morning. That is pulling gold and silver down about 0.5% this morning. Again, they've been on a tear. A little pullback really doesn't really mean anything at this point, so don't read too much into it. But as we've been talking about, when we look at the big picture of the US dollar to Canadian dollar, for example, we go through these extremes where the market has an extreme level and people give up on a currency, and then it finally takes off and runs, and people will move into the US dollar currency, and then it pulls back, and then they get out of the currency. I've talked about this. Every time we hit one of these critical points, people just give up and they rotate capital, and it's the typical fear and then greed and then fear. And people are still very nervous. Now, this is for Canadian dollar. It looks like it's primed and ready to move higher fairly significantly. In fact, the long-term picture for this, if the charts play out as they're pointing to, is about $1.73, $1.74 to the upside, which means the US dollar could strengthen dramatically and other currencies are going to collapse. And of course, that will wreak havoc on the gold market. And typically that also means that the stock market's going to sell off. And eventually, if there's that much pressure and selling pressure, usually it will pull precious metals down. Now, that's not what everybody wants to hear. That's not ideally what we all really want, because it means difficult economy, difficult chaos in the world. But overall, we just need to be aware of that. But right now, gold taking a little bit of a pause. It's had a very nice run. At this point, it's just nothing more than a little tiny pullback. And the dollar is really at this point just having a bounce within a downtrend. So don't read too much into it. The long-term trends are showing the kind of world is getting closer and closer to this big tipping point, as Ray Dalio kind of talked about. And you can definitely see it and feel it with the internal struggles within every country here going on. Now, this morning around 10 o'clock, we've got the new home sales coming out, which will be kind of interesting. I mean, we're not even close to being a good opportunity to get into the real estate market. But I am excited. This is the IYR, the REITs. We'll see how this unfolds. But eventually, as I mentioned the other day, we're going to have an amazing opportunity in real estate, either through REITs, which is a very simple way to trade real estate, provides actually a lot more upside potential if it's done right. If we just go back to the monthly chart and go way back in time here, REITs can lose like 70-80%. They can sell off fairly significantly. They're not like just because REITs sell off 77% doesn't mean real estate actually sold off. It's just people are dumping the shares and they drive the price down. As the price goes down, the dividends generally stay roughly the same, and so the dividend starts to skyrocket. So this is going to be that opportunity where not only you can get into real estate at a very affordable price with massive, huge dividends. Could be like 8, 10, 15, 20% in some cases if you actually pick things up at a capitulation low. And then you've got potential for huge returns in terms of the market moving forward. You could make hundreds of percent return over the long run, plus your huge dividends paid out every month. So this will be an amazing opportunity down the road. The nice thing about REITs is you still need to time them. I hate to say time them. We need to follow the cycles and follow the price flows to make sure you get in at a good long-term investment price. Up here is still nosebleed territory. But the nice thing is you can buy in with $10,000, $100,000. You can use leverage, like margins. You can end up getting like 3-4 times potential position, giving you a lot of upside and dividends at a very good rate going forward. So anyway, that's a really interesting opportunity down the road. And we'll see the new home sales out this morning. Another person wanted to see the DAX. Let's take a look at the DAX. I think this is the DAX ETF. Wanted me to compare it to the S&P 500. So let's compare it to the S&P 500. And we'll just split this screen here if I can get a hold of it. And so if we take a look at the DAX, we talked about this in a mentoring session a long time ago. We overlaid all the different country indices. And the bottom one is the SPY, the top one is the DAX. Now they generally move in sync with each other. Not always perfectly timed. One may drag out and hold up value before it finally sells off with the US. Generally they're going up and down together at the same time. Just some move at a little different timing. If we go back in time and just get rid of this more recent price action, if we just go back to any of these times and zoom in, you'll notice they pretty much move together. They're going up, they're going down. The DAX, this over here, topped out a little earlier, but generally the markets kind of bottom at the same time. It's usually the global indices will either top out before the U.S. or a little bit after the U.S. Nothing is perfect, but the general rule is they pretty much move together, right? They're big sell-offs and big rallies are generally at the same time. So that's kind of it in a nutshell. If we look at the DAX here, it has been flagging sideways. It hasn't been really moving up, and I don't know really what stocks are in the DAX. It's not my thing. I don't know the details. Obviously, it doesn't have NVIDIA or any of these big techs because it's not really moving up. Maybe it does, but I don't know why it's flatlining. This could be seen as a bullish phase. There's potential if the U.S. stock market struggles a bit, we could see money rotate to the DAX, but overall, it's kind of flatlining and struggling to move anywhere more here. Let's take a quick look over at silver. Silver down 0.6%. We're seeing it, let's pull up this 10-minute chart so you can see the price action this morning a bit. Overall, silver just taking a bit of a pause or breather. If we look at gold miners or silver miners, they took a little bit of they gapped higher, a little bit of an exhaustion move to the upside and sold down a bit. In pre-market today, we are seeing miners, they are set to open relatively flat. Again, it's feeling a little bit like a crowded play. It's feeling like this kind of move right here, where it's had a very strong move. We got big volume surge. Everybody kind of piles in at the same time, and then it needs some time to work itself out before potentially moving higher. So a pause and pullback here would be very good for the gold miners. Now, obviously, big red bar and a huge hit and a break below this level, and if it forms a bearish formation, it's pointing to much lower pricing. The trend will reverse. But at this point, a pullback and something that goes sideways for a while is perfectly healthy. In fact, we kind of want a bit of a breather because things that just keep going up eventually have a very sharp correction. It'll catch up. So that's kind of where we are. Silver miners are the same thing. Let's take a quick look over at platinum and palladium. Both of them had a very big pop in the past session. We can see a huge move up here, huge volume. If we go take a look at palladium, same type of thing, a big surge. And this, this is just, I think, telling us that there's a feeding frenzy right now. People are moving into all precious metals, and they're just rushing in the door. So overall, there's no doubt we're in an uptrend with the precious metal space. Money is flowing in. It's starting to feel like people don't care what price they get in. They're just driving it up. They just want in. They have fear of missing out on the move. And it is just a warning sign that the markets might need a bit of a breather or pause before going a lot higher. Last but not least, somebody wanted to cover the energy space. We've talked about this for quite a while. When we go way back here, we talked about how, let's just go way back, how the energy sector space was going up, and then it more or less flatlined, and now I would say it's kind of more so on the downward slope. Obviously, if a war kicks in, another type of war, or some escalation of a current war, oil could go higher and make it and drag this up. But overall, it does feel like we've gone from a rising environment, rising highs or lows, to now we're in a falling environment. And this is that critical middle level we talked about back over here with these. We're talking about we need a crack to the downside that breaks a support level, and then eventually we need to let the markets work themselves up, and it could push deep into resistance. And then eventually, if the stock market gives us a sell signal, which it could in the next week or two, or depending on how things unfold, potentially we play an inverse ETF, and we could see a very precipitous fall in this space. And obviously, you have to play an inverse ETF. I think it's a 2x. There's potential for a 20 to 22% move to the downside, roughly. If you use a 2x, obviously it's a 40% potential move. So there's some excitement there. I know some of you actually bought the inverse ETFs when we were up here, and I know some of you locked in gains, or you're still holding them and you're still anticipating this further drop. So anyway, it's an interesting play, and it might be a discretionary trade that we put on. It'll definitely be a speculative one. It's an inverse trade, and we're still kind of in a bullish phase, but this trade setup does look really good. The key is waiting for the right time to do it. And not jumping ship. We'll wait for price to start to break down. We'll wait for a sell signal in the stock market, and then I'll reanalyze at that time if I want to take a small position in an inverse trade, which I think is ERY. I have not traded this ETF in years, but I have traded it, and it's a inverse, and as you can see, it just keeps losing value. It's not something you hold over time, a long time, but overall this would have a spike. As the market drops, this will spike up. You can see these spikes are pretty strong when you get these rallies. You're looking at 38%. This other one was 50%. And again, I think we could see something run probably 40% or somewhere in that range when the timing is right. Anyways, that's it for this morning. Talk to you soon. Bye-bye.